Good morning. For Traders Exclusive, this is George Kachuk, or RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning. The equity markets are still in this choppy uptrend. So we saw some good action last week, which came in on greater volume than the week before, and that is that the S&P 500 got above its 200-day moving average. The NASDAQ also, briefly, the prior week had dipped below that 200-day moving average and also got up above its 200-day moving average. Now, the reason I'm calling this a little bit choppy is market breadth is only marginally improving, and we'd like to see market breadth improve a little bit more, and we'll get to that right away, but let's just talk about some of the levels. So the S&P 500 has some resistance between that 2120 to 2132 level, so we'd like to see the S&P get above that, and on the low side it has support at that 2060 to 2020 level. Now on the NASDAQ, we're looking to see if the NASDAQ can get above the 5160 to the 5232 level. That's where the resistance lines are, and if it can get above that, the market may run to the upside. Now support's at 4960 to about the 4900 level, and we're looking to see if the NASDAQ can hold that. And the Dow, we're looking to see if the Dow can get above 18,000. That's its resistance. On the bottom, support's right about that 17,500 level. Now, the key to the Dow too may be the Dow transports. They've been lagging severely, and the word is if you want a true bull market, you need the transports to participate. However, the transports are rising. If you look at the chart of transports in so-called an ascending triangle, and they're just about taking out their October highs, and they can take out that level decisively, continue to move higher, and get above its 200-day moving average. That again would be really good for the market, and that's what we're looking for. Now, we talked about breadth. It's not great, because if we look at the S&P 500, it's doing quite well. But if you look at an equal weight S&P 500, we can look at that by looking at the Guggenheim ETF, the RSP, we'll see that's still below its 200-day moving average. So it means only the big cap stocks are participating in the equal weight, or we're not seeing all stocks participating. That's what we'd like to see. And also, if we look at the percentage of the NYSE stocks above its 200-day moving average, we're right at about 36% now. If we can get above 40%, and that again was the late October, early November highs, that again may be exactly what this market needs to propel itself higher. So I'll be looking at those levels. Now, looking at the sectors that are doing well, there's very positive notes because the economically sensitive sectors are doing very well. So if we look at the consumer discretionary, that's leading, and you see it in some retailers and apparel stocks, home building stocks, so stocks like Nike, Ulta Salons, Starbucks, some of the building stocks like Home Depot, Lowe's, or Acuity brands, doing very well. So that's some good leadership there. The industrial sector is doing very well too, and they got a boost from defensive stocks like Lockheed Martin and Raytheon. Technology stocks are also doing very well. If we look at the XLK, and that's a mixed bag, stocks from Google, Amazon, Facebook, that's doing very well. Now, financial stocks, we continue to see regional banks do very well. Those are like Banks of the Ozarks, Home Bank Shares, Private Bank Corp, MBFIs look to have a move. So we're seeing some good action going on there. And energy is doing terrible. That's probably a sector to avoid now. If you look at the XLE, same with utilities, XLU, and healthcare sector, XLV is kind of just sort of treading water right now. But we're looking to see if some of the big biocaps can regain some of their moves, and that'd be stocks like Gilead, Celgene, Regeneron, Biogen, some of the more speculative like Arcadia, Optotech. So in a nutshell, let's kind of just review. Those are the things we're looking for. We want to see breadth improve, and we want to see if the NASDAQ and the S&P can get above the resistance levels, and that will tell you some that the market's ready to run. Up until then, we're still a little bit in this choppy trend, and the key to this may be that breadth needs to improve. So as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great week, and may you celebrate Thanksgiving. So greetings to you and your family. Thank you.